Hey everyone, and welcome to this week's On the Spot. I'm Zach Strickland, Director of Freight Market Intelligence here at FreightWaves, and with me as always is John Paul Hampstead, Director of Passport Market Research as well. So, JP, we've had an interesting week. We had another hurricane come through the Gulf. Does not appear to have had a strong impact to the freight market, however, and again, just like Laura a couple of weeks ago, it's really hard to discern just how much of an impact these hurricanes are going to have in a market that's already tremendously destabilized.
Yeah, I mean, Orange Beach, Alabama, not a massive logistics hub. Obviously, there's flooding. There's sort of local infrastructure damage, right? Bridges, railroads, things like that. But nothing that's requiring like a massive amount of freight to come in
right.
At least yet. So that, it looks like, and again, tender rejections are very high. Spot rates are already very high. If we were sort of on the bubble like we were back in May, right? Like, is it going to go into an inflationary market? Is it not? These things might have had bigger effects, but we're already kind of there. I mean, we did see Atlanta buck the trend of slowly loosening capacity and have tender rejections go up a little bit. The same thing happened in Chicago, I believe. So, I'm not going to say that's because of the hurricane, but in general, the Southeast has gotten more expensive over the past few weeks.
Yeah, and I think really the big story here is the fact that the market itself is just still so turbulent, and it's hard to discern these other events and how they're impacting the market. Now, I think really what we need to focus on is, tender rejection rates. They started to slide down a little bit for the first time. I mean, we've had some moderate declines here and there right after the 4th of July, et cetera. We're just still after Labor Day, so that doesn't mean, these post-holiday contractions or loosening
right.
Are not unusual, and it certainly doesn't necessarily say that we've hit the peak, but volumes are starting to come back down. OTVI is now dropping along with it. In the past, OTVI has gone up, and continued to do so. So we're seeing a couple of things kind of change here in the pattern.
Yeah, I mean, September is honestly normally a fairly like soft month, right? So in 18 and 19, tendered volumes ended September lower than they began September. So both of the past 2 years.
But some of that also has to do with the Labor Day being at the beginning of the month, because you typically have this big surge of freight right around the holiday. So it looks like there's a big jump. So
but then going ahead to that, last year October ended the month lower than it began.
Right.
In that was in 19. In 18, there was kind of a surge in the last week of October, so that October sort of ended on a strong note.
Well, these are kind of transition months. September, October. This is where we're transitioning into the fourth quarter retail peak season, where we have a lot of freight moving due to getting into the stores. This year is going to be very interesting to see that unfold at this point with all the e-commerce, and of course depending on how the virus behaves in the cold weather. But these are kind of these, we always had this experience back in my day where September was kind of hit or miss. October was a little softer than September just because it's the first quarter or first month of the quarter, typically a little bit lower volumes before it starts ramping up into November, December. But on the material side, like the Home Depots, the Lowe's, that's actually the beginning of the end for them.
Yeah.
Retail is more about Walmart,
Summer's
Target.
over.
Exactly. So the construction, home improvement projects, which is a huge commodity flow that has been, really propping up this freight market recovery, is about to end seasonally speaking.
Right. And maybe that gets extended a little bit by hurricane damage, just depending on how many more storms we get. But yeah, this is a time when we see a transition to more, consumer goods, electronics, toys, clothing, honestly, lots of things like that.
And I think that's the question moving forward is, how much have we already seen of that type of spending? Because we had this almost Christmas in May, June where all these people were in their houses, they were getting bored, isolating themselves, so they went out and bought TVs, redid their house, did all this activity that's normally reserved for, December, January, when they're stuck in their house anyway. Again,
that's a good question. I mean, I think that food and bev will be very strong. I think that apparel has a chance to kind of have its moment in the sun, where people weren't buying clothes a lot, but now that we're having a seasonal shift,
Right.
people, to the extent that people have spent more time outdoors maybe than they have in the past, they might want to buy warmer clothing. I would look for things like that, maybe a little bit of outperformance in sort of apparel retailers. It's a good question though. I mean, I don't think that people are going to say like, well, I'm not getting you a Christmas present this year, Timmy, because you've been in quarantine this whole time, and I've been having to buy you toys
True.
every week just to keep me from going crazy. I don't know if that's going to fly. We'll see.
Now, Christmas is about the kids, but I mean that doesn't mean that the big ticket items don't get bought either. I don't know how much of that is going to.
I even wonder about things like cars, right? You always see these car commercials on TV around Christmas, or it's like someone's getting a Lexus with a big red bow on it. I personally don't know anyone who's ever bought someone else a car for Christmas. I assume it must happen. Or maybe that's just like the Matrix, just trying to convince me that it's a thing.
Right.
But I know that that like dealerships have been really aggressive in pushing promotions and sales, and I wonder if that continues to ramp through the end of the year. It was already positive year over year in terms of train carloads of automotive parts, and that momentum may continue.
And people are actually slowly returning to work. We just saw the banks, the major banks now have people returning back to their offices now. So I think that we are going to see the continued result of the recovery. We still haven't seen the full potential of what can be moving through the country right now. We're still in this recovery process with the industrial economy. We kind of got propped up by CPG, food and bev early on in the recovery,
right.
And the home goods and supplies and things like that really ramped up.
Ag is having a big year too. Yeah. Grain is really high. Obviously produce and things like that, but you're right, like oil and gas, chemicals, heavy manufacturing, a lot of that has been fairly depressed.
And we haven't seen their full potential yet. Now we're starting to see, we look at carload volumes here, and those have not, they're slowly recovering. It's certainly nothing like the big curve that we saw in trucking earlier on in the year,
right.
But it's slowly recovered. These are the raw goods, the raw materials, the oil and gas, chemicals, things like that. They're coming back, but they're coming back very slowly. So that'll continue to recover more than likely. Still a lot of concerns around unemployment.
Yeah, I mean, those numbers are improving, but it's slow. I mean, what are we, around like 8% unemployment, which is bad, but it's a lot better than it was. I don't know how many of the people who are out of work were involved in freight-intensive industries. Obviously, it's horrible that like we can't go out to eat at lots of restaurants that are closed or have limited operations, things like that. But to me, I haven't, and honestly, I haven't dug like deeply into the BLS data, but I don't know how many of the people who are unemployed are involved in freight consuming industries.
I mean, the concern here isn't necessarily that we're, the restaurant activity.
Yeah,
it's spending. It's the people that are unemployed at some point will have to stop spending, which will, of course, have this trickle-up effect, if you will, into the economy. And even though there are a lot of service industry workers, but
what's your gut sense, though? I mean, do you think that we have peaked and that it's a slow slide downward continuously from now until Q2 2021 where it bottoms? And
for those that were watching the Global Trade Tech Conference, I did a demo with Craig Fuller, and that we watch a lot of Maritime Data.
Yeah.
And Maritime Data has two purposes. One, to show us how much freight is actually coming into the United States, which of course ends up on a truck at some point. Whether or not that spends a lot of time in the warehouse or not, is hard to tell. Last year it spent a ton of time in warehouses. We saw inventory levels increase slowly over the year as there was a lot of pull forward due to the economic tensions between China and the United States. That's not, we're seeing a similar effect, but not necessarily because of tensions between China, but the idea that they can't get capacity to have the freight in the places they need it when they need it. So we're seeing a pull forward for retail season happening earlier than we would normally see it by about a month or so. And I've been talking to Henry Byers, our maritime expert, about this extensively. We are still seeing a heavy amount of bookings data. Like we're seeing 200 to 300% increase year over year in the import volumes coming across the ocean from China right now, meaning that the shippers are planning at least to be ready for an amount of demand, a significant demand at that. So that to me is a signal that these guys, even though they haven't been great at predicting the future, because this is what caught them off guard in April and May, they didn't think that things were going to come back as quickly as they did. Home Depot, Lowe's, they certainly didn't foresee this type of event. So it doesn't necessarily mean that it's going to happen this way, but the fact that they are getting prepared for it means that there's a good chance that they're going to be running promotions for these products. They're able to control their demand a lot more than we may think. Obviously they've adjusted somewhat to the new world order with the COVID pandemic, but again, if we have another big outbreak.
I've also heard that the new PlayStations, the new iPhones are really expected to strain air cargo capacity even further.
Right.
That's something I was talking to a CEO of logistics 3PL the other day, who was basically saying that he's been looking for air capacity and it's getting booked up.
And we haven't seen the air cargo rates increase like they do seasonally. October, typically a peak for them, although we've already seen peak rates, even though the airlines are not necessarily doing great due to the fact that their capacity is all gone.
So, I mean, just to summarize, you think that sort of the multimodal data, looking at what's happening in Asia with shippers buying up capacity, tendering freight, you think that that's still going to show up in the U.S. in the future, and that we're set up for a strong, at least retail peak season?
Yeah, I think retail peak still looks like it's on schedule, again, pending whatever 2020 has left in its tank.
Right.
We still have plenty of active hurricanes sitting out there in the Atlantic. Unfortunately, the wildfires, again, still burning in California and Oregon. All these things have, economic impacts down the line. So I still think that we're not going to see volumes just plummet. We're not going to see rejection rates just plummet. And again, we're going into this bid season where rates will naturally be corrected towards the market rate, and so that'll lower rejection rates as well.
That's what I think. I think that's already starting to happen a little bit. I mean, I know that we talked about slightly softer volumes, but I do think that shippers are adjusting their behavior. Brokers, carriers are adjusting their behavior. I mean, at some point, the number of contract rate discussions that we've heard about will materially affect tender rejections.
Right, and we're seeing, we may see some of that right now. Los Angeles, for instance, not necessarily seeing a huge decline in volumes, not seeing a huge decline in rejection rates, but it looks like it's moderated for the time being, even though there's tons of potential. I was talking to Mike Bodendistel the other day. There's still a lot of freight sitting around the port there that needs to be moved. So it's still there. It's still very active, even though it looks like for the time being we're in this, is it a long-term trend change or just a near-term correction from the Labor Day holiday?
Right.
Not real sure.
A retreat from an unsustainable, unprecedented peak. Right.
Exactly. Well, we've got about 30 seconds left. Thank you so much. And do you have anything working on Passport right now?
Yeah, we're working on something about Nikola's business model. Setting all the claims about the technology aside, like how much sense does it actually make for over-the-road truckload carriers. Also working on some deep market research about last mile.
Very good stuff. Well, thank you so much, JP, for joining me today, and thank you for watching. And make sure to check out all our future freight market updates as well as On the Spot on FreightWaves.com. Have a great week.